So Walmart just released its Q4 earnings and they are dramatic. Dramatic in the sales that they could achieve in the last quarter, the most important quarter, the year end for retail. Now, there is a little bit of happy end towards the end of this vlog, so you should stay tuned. And we will talk about how the future of Walmart will be, and also how the beginnings were, because it's the very first time we're speaking about Walmart stock. So make sure to stay tuned.
Wolf of Dubai.
So to give you a little bit of background, I will just read you the Wikipedia text that is written for Walmart, which says Walmart Inc. is an American multinational retail corporation that operates a chain of hypermarkets, discount department stores, and grocery stores headquartered in Bentonville, Arkansas. The company was founded by Sam Walton in 1962 and incorporated on October 31st, which is Halloween. It also owns and operates Sam's Club retail warehouses as of 31st of October 2019. Walmart has 11,438 stores and clubs in 27 countries. This is huge, and the guy behind all of this is called Sam Walton. And a little bit about him: he was an American businessman and entrepreneur, best known for founding the retailers Walmart and Sam's Club. Walmart stores grew to the world's largest corporation by revenue, as well as the biggest private employer in the world. Now, as you can see, this is huge. And just before diving to the numbers, you can see by the number that they just made last revenue, which was $140 billion in revenue. This is such a huge number that it's represent the whole market cap of Netflix, which they made in sales in one quarter. This shows you how big this company is. And apparently I was reading about Sam Walton. He was so obsessed about retailing that he drove up to the shops of his competition and measured out the walkways to understand if they had any competitive advantage and how they structured their shops. So he was really he was one of the very, very loved men in the US for generating so many employees and jobs in the United States, creating one of the biggest companies in the world. And therefore, let's dive into the stock of Walmart, how it looks today. So looking into Walmart today, it's a totally different company, obviously, that he founded since 1969 as a retail store. It's a retail giant, meanwhile. They have retail, they have shops in every bigger city, and even on the land sides of the US, even worldwide, internationally. And they have also e-commerce, especially their grocery business in e-commerce is quite huge. And if we are looking into the stock is currently at around $120 per share. And as you can see, yesterday, just after the earnings reported, even though it was on a quite negative note, the stock was up, at least in the first hours, of 1.34%. And if we are looking into the last 3, 6, 12 months, you can see that, over the last 12 months, the stock could gain a bit of traction here with 16-17%. And you can compare it to the S&P, which made last year around 30% or almost 30%. So this is underperformed the market, though the market cap is huge here of $338 billion. So even we just talked, as you remember, just seconds ago about the revenue that they did in one quarter, which was $140 billion. So you can see they made $140 billion in sales, but they are worth $340 billion overall on the market, and the PE ratio is about 24, 23. They pay a little bit of dividend, which is around 1.8%. So this is the stock. It's a kind of, I would say, a stock that you can put in your portfolio and, or could had in your portfolio to gather a little bit of the retail space in the US and also the retail space worldwide, but also, into the traditional commerce space. If you want to have a really old established company with brand, then Walmart definitely could be something for you. However, though, looking now into the earnings, you will see why it was quite negative what they just did the last quarter. Okay, so here are the numbers that matter. So they made earnings per share at $1.38 versus $1.43 expected. So quite under the expectations here. Revenue came also short with $141.67 billion in one quarter, in 3 months, in 90 days. This is ridiculous numbers. I can even comprehend these numbers to have in sales. This accounting behind this must be incredible. So the expectation was a little bit on the higher side. So about 142 billion, 0.5 was expected, and same sales store growth. This is a usual number that traditional retail uses to see, okay, same store, how much we could grow our sales. And as you can see, through e-commerce, through people moving more into online sales, more people moving into buying and ordering online, the growth of these companies are quite, let's say, in the very, very single digits. So 1.9% growth in the US, same store sales, and 2.3 was actually expected, so a very significant lower growth for the company. And the CEO actually explains why. He believes that the toy business, or they know that the toy business was less sales than expected. They had also the wrong portfolio into the clothes and apparel items in their collection, and overall the demand for sales was quite lower than expected. And I'm wondering, if you are the biggest retailer in the world and you see that your sales is crumbling over the most important holiday season. There was also some other reasons that the holidays was a little bit shorter than usual, and people, didn't have the time to come to the shop, which is a big impact. I mean, online you can just go home and order while you're on the way home, or even when you reach home from your bed. And for the traditional retail, you have to go there, you have to find parking, you have to go to the store, you have to bring your items back to your car, you have to bring the items back up to your flat or to your house, to your kitchen, to your fridge. So you can see how big this impact is for e-commerce, and most importantly, sometimes you have even a more competitive price because Amazon or other players on the market can just outprice retailers. And we can see this trend. We could see it in different companies as well that are in the retail business, that sales were slower or less in the last quarter with the holidays. So this trend you can actually see also with other companies in the retail business. They also reported a slower holidays sale, and I'm really concerned about these companies for looking further, because in the end of the day we are moving digitally, and these companies have to have a product that must be on the horizon that gives us a little bit indication. The guidance for next year was also not that overwhelming in the earnings of Walmart. But one of the most important things is here that some people might now argue that actually, hey, the overall situation holidays was not good for sales or retailers. Doesn't matter if digital or offline, not that good, and people didn't have the money to buy. And this is absolutely wrong, because Amazon quadrupled the same day delivery, for example, during the holidays. They smashed all expectations for the last holiday season. So there is not a weaker demand. It's just the wrong distribution. And distribution is very important. You see how much of billions Amazon are moving into distribution, to same-day delivery, to make it even better and faster to get your products than you going to the retail store. And therefore I believe the future of commerce is really, really scary. Now there is, let's say, a small happy end that we move in now. So Walmart tried to move into the digital world, and actually they having a lot of sale in online, especially their grocery business. Sales online is really one of the growing factors. They grew 35% in grocery sales for Walmart over the last quarter, which is a really good growth number, because if you thinking about growth numbers and growth companies or growth sectors, you see the same growth numbers in AWS for Amazon, or you see the same growth for the service department of Apple, or you see this growth in other smaller parts of Uber Eats. You know, you see this double-digit or high double-digit growth numbers for these big companies. But there is a catch though, even into that. So you cannot be happy as investor of Walmart to say, hey, they have online, they are going into the online sales of groceries and so on, because first of all, it's way less revenue than from the overall cake. Like, you know, they made $140 billion from their last quarter only in retail sales, and they will make in the next couple of months, 12 months, 50 billion by the online sales. Still a huge number, but compared to the overall business, it's very small margin. And even it's get worse, because the whole online business, online sales of Walmart is not profitable at all, and they are just burning cash. They are just to keep up with the online business. And therefore I believe we should jump into the conclusion. So looking into all of this, it's the very first time I'm looking very deeper and make a whole research about the stock of Walmart in the occasion of the earnings. Obviously, if you like this video, make sure to thumb up and make this thumb sign blue, like the blue logo of Walmart. Now, to be precise, I'm thinking that Walmart is a huge company and can sustain itself for a couple of more years. But the future, the growth, what I'm personally looking into, I look for growth in companies, how the company can double its size with some risk involved, obviously. But is the risk still not also there for Walmart to just die out slowly? I mean, you know, a risk isn't everything, and you know, you need to make this decision for your stock investing to make sure, hey, is a 50% growth for the company worth that they might get out of business, might get more competition, might not have the right product than a company that is big and returning big but slowly dying out. But I'm not saying at this point of time that there is an end or dead end for Walmart, but if they cannot revive themselves every now and then definitely there will be an issue for the upcoming years. And therefore, let me know what you think in the comment, because Walmart is definitely a household name, and I'm very glad that we had the chance to look into this stock today.